Hello, this is Professor Randy Minton from Thomas University, and today what I'd like to do is walk you through one of the problem sets at the end of Chapter 14, and it is problem 14-1b. And 14-1b, even though it's one of the more, let's call it elementary of problems, it does cover a lot of ground, and it does make you think a little bit about how you actually do these computations. Now, what I've done is, to save time, because these videos can get quite lengthy in terms of the rendering process, what I've done is I've gone ahead and I've created the balance sheets for December the 31st of 2016 and December the 31st of 2015. And as you can see, I have at least hopefully balance these out properly, and so we've got the same amount in liabilities as we do liabilities and shareholders' equities we do have in assets. And so with that, we know that we're ready to begin. Now, when we do the cash flows, what we're doing is going through and explaining how we went from this number 47,940 to this number 70,720. And what we should do is, first of all, just go ahead and calculate what that difference is. So it's going to be simply equal to this number minus this number. Now, if we had, or $22,780. Now, if we had a higher number on this side, that is on the December the 31st, 2015 balance sheet, than we had on this side, then we would have a negative number there. So in this case, we generated positive cash flow in the amount of $22,780. And what we have to do then is come over here and fill out the form for cash flows, and we will then eventually get to, hopefully, down here at the very bottom, this should equal $22,780 if we do the work correctly. Now, again, as I went through, I tried to make it easier for you to follow what I'm doing. But before we go there, I want to read the instructions, because it's always important when you do an accounting problem to read the instructions first. And it says to prepare a statement of cash flows using the indirect method of presenting cash flows from operating activities. And remember, the indirect method is the one that's most heavily in use, because it's easier to get to all of the numbers. So, without further ado, oh yeah, let's do this first. Let's read the additional data obtained from an examination. So we have the balance sheet over here for each year, and now they've given us some additional information that we need to consider. So the first says that equipment and land were acquired for cash. That's A. B says there were no disposals of equipment during the year. C. The investments were sold for $91,800 cash. D. The common stock was issued for cash. E. There was a $141,680 credit to retained earnings for net income, and there was a $102,000 debit to retained earnings for cash dividends declared. So those are the additional pieces of information that we will use in addition to whatever we derive directly here from the two balance sheets. So the first thing that we do with the cash flow from under the indirect method, the first thing that we do is to calculate net income, or pull net income from the income statement. Now in this case, we don't really have to do that, because it's given to us. It says that there was a $141,680 credit to retained earnings for net income. Well, if you credit retained earnings, since retained earnings goes up on the right-hand side, and a credit is an entry to the right-hand side, then you're increasing net income. If that had been to the left-hand side, it had been debited, you would have had a loss here, but you don't. You have net income. So I'm going to go ahead and I'm just going to put a 1 over here, because this tells my calculations to do something, and in this case it puts this amount, $141,680, into this slot for net income. And I'm just going to pull down a little bit and show you that if nothing else had changed, which is never going to be the case, but if nothing else had changed, you would have $141,000 worth of cash flow. Now we know that we're looking for $22,780, so we have to go further and we have to figure things out. Okay, so generally speaking, we'll start out with net income and then we will add to it any depreciation. Well, why? Because in the net income number there's a subtraction for depreciation. And because that's the way that you get to net income. It's revenues minus all your expenses, including non-cash expenses like depreciation. So, since depreciation is a non-cash expense, then it needs to come out of there. And since they were very specific about not having any disposals of equipment during the year, then we can make the assumption that all of this depreciation change from 99,110 or excuse me, from 84,320 to 99,110, we can make the assumption that that entire change occurred through depreciation. Now we don't have the income statement, but if you did, that's what would be showing under depreciation for equipment, is the difference between those two numbers. So I'm just going to go ahead and, again, I've keyed all of this stuff to these numbers that I'm putting on the side, but this is the second item that I'm dealing with, so I'm going to put a 2 in there. It has nothing to do with anything other than helping me to automatically make these calculations for us. So here we have depreciation difference. The difference between 99,110 and 84,320 is $14,790. So that's an increase in our cash. Next, we have to look at some of the changes in current operating assets and liabilities that would affect us up here on the operating side. Now, I'm going to skip this first one here for a second because you'll be able to see some other things when that happens. And I'm going to go directly to the increase in accounts receivable net. And I know it's an increase because if I come back over here to my two balance sheets, I see for 2016 at the end of the year I had $207,230, and at December 31st of 2015 I only had $188,190. So what that tells me then, since I have an increase in accounts receivable, that I didn't receive the cash. Okay, and it's kind of the way that you can look at this. Since there was an increase in accounts receivable, the alternative would have been that I would have received cash instead of accounts receivable. So my cash actually goes down in this case. So if I put my little number in here, you can see that I have a $19,040 difference, which is a negative number because my accounts receivable went up. Okay, I also had an increase in inventories. If I look over here again at inventories, that's these two numbers right up here, I see that for December the 31st, 2016, I had $298,520, and for 2015 at December 31st, I had $289,850. So that indicates that I have an increase in inventories, which is basically a use of my cash. Okay, the alternative would have been I had a decrease in inventory, in which case it would increase my cash. Okay, so here we are now with an $8,670 decrease in cash. The next thing we do is we kind of take a look down through here and see if there's anything else that would affect the current operating assets and liabilities. And if I look down through here on the asset side now, I'm only dealing with the assets at this point, I see that I have some investments, and again I'm going to deal with investments here in a second, but land, equipment, and accumulated depreciation, all of those things either I've dealt with in terms of the depreciation, which actually would have came from the income statement, not from this, but the land and equipment are longer term things, so they wouldn't be under the current section here. Okay, so let me go down here to the next section, accounts payable for merchandise creditors. Now remember, when accounts payable goes up, what that really represents is my financing the business on my suppliers. So instead of, the alternative would be that I would have paid cash for this. So since no cash went out, the accounts payable actually went up on a net basis, then that represents an increase in my cash flow. So that would be what, item number 5 now. And the difference between the two is $11,560, and that represents a positive to cash flow. If I look at the next item here, I have an increase in my accrued expenses as well. So the same rules would apply. Since I didn't pay the expenses, that means I shepherded my cash, or I kept my cash, as opposed to paying it out. So that represents for me, period to period, an increase in my cash. So if I pop that number in there now, that is essentially all that we would typically have to calculate net cash flows from operating activities. However, we have a little bit of a conundrum here that we have to deal with. If I look at investments up here, I had some investments and now I don't have any investments. They're gone. And if that be the case, what I have to do, since I've sold investments, I have to show those investments in total as coming from the cash flows from investing activities down here. All right. So now I got to be kind of careful, because if I look back on my additional data, I see that the investments were sold for $91,800 in cash. Okay, they were sold for $91,800 in cash. Well, I have to put that number here. Okay, that's the entire proceeds from it. That's the requirement for us. So I'm going to go ahead and label this one 7 and put it here. And that's the $91,800 that it told us that we received from the sale of these investments. However, we started out with $102,000 in the investment. We only received $91,800, so that means that we had a loss, right? The difference between 102 and 91.8. Now, that loss would already be embedded in this number up here. So since I have to show this, I also have to show the loss. Now, the loss would typically have been subtracted from the income, all right, or would be a reduction of our income, just as gains would be an addition to income. Well, since I'm reversing this process, what I have to do is I have to show the loss now as a plus, so that it all works through the system once I have put this number in here, right? Okay, so in other words, losses become positive cash flow and gains become negative cash flow. So I'm going to go ahead and put a 7 up here, so it's the same part of the same entry. And the difference between the $102,000 and the $91,800 is $10,200. And that then completes the first section up here of the cash flow statement, in that we have all of the cash flows, the net cash flows, if you will, from operating activities. Okay, so let's drop down to cash flows from investing activities, and we've already picked up the total amount that we received from the sale of the investments. Now we need to look at what else we did, and land and equipment was also on your balance sheet. And let me just move up just a little bit so that you can see both here on the balance sheet. And as you see, we had no land in 2015 at the end of the year, but we had $295,800 in land at the end of the second year. And I believe that what it said was that we bought all of that stuff for cash, right? Equipment and land were acquired for cash. That's item A. So that means that we spent cash. So if cash went out, then that would be a negative number for cash. So I'm just going to put an 8 in here because this is the 8th item that I've dealt with. And you see that it pops up now as a negative number of $295,800, which is directly off of the balance sheet here. Now we're also told with respect that the equipment itself was bought for cash, but they gave us another little piece of information, and that was that none of the equipment was disposed of during the year. And that's an important piece, because if it were, we'd have to take it into consideration both in the accumulated depreciation side and in the equipment side. That being not the case here, where everything was just repurchased, or purchase I should say, then we have just to calculate the difference between these two numbers, and since it went up, then we would have a use of cash. So in this case, that would be a negative number that gets popped through here, and I'll assign it number 9. So on the side of net cash flows from investing activities, we actually had a $284,580 reduction of cash, if I did the math correctly here. Okay, so here we had an increase through operating activities, which is a good thing, and decrease through the cash flow of investing activities. Now let's see if from financing we actually had something to help us out. So because right now we know that actually, frankly, you know that it's going to have to be positive numbers coming down through here. The reason being is because that's $130,000 and negative, and we have to come back to $22,780 positive. Okay, so you're always tying out to the actual change in cash. Now, cash received from the issuance of stock, and we were again told that all of that stuff, the common stock, was issued for cash. So we want to take a look, but we're going to look at actually two items here. You see, common stock, when it has a par value, is always sold for par in terms of the way that we account for it. So we had clearly here a difference of 100,000 shares of stock that were sold, because the par value is 1, and we're going to value the common stock at par in this particular case. So the difference is $100,000. But if you look at the next item here, this is the excess price over par for the common stock. So it means that it didn't sell for $1. It actually sold for $2.50 when you work through the numbers, because the difference between this number and this 204 is 150,000. So the two of these together, 250,000, means that, if you were to actually work through the numbers, means that you sold the stock not for $1, which is the par, but at $2.50, and that gave rise to this paid-in capital in excess of par. So I'm going to put down a 10 for this item because it's the 10th item we've discussed, and that gives us $250,000 worth of additional cash flow. Now we look down here at the bottom and we see, well, we're still a long way from 22,780, but luckily what we have is we have dividends here. Now this is getting a little bit tricky. It tells you that in your book that there was a $102,000 debit to retained earnings for cash dividends declared. $102,000. If I put the $102,000 in there by itself, I will not be correct. And here's the reason. look up here at your dividends payable. Dividends payable went from 20,400 to 25,500. That's an increase in that payable, even though we had a debit to retained earnings for cash dividends declared of 102. You see, this difference here has to be subtracted from the 102,000 in order for the cash flow to be properly reflected. So if I do that, I'm going to designate this as 11, then it shows us with a use of cash of only 96,900, even though we declared 102,000, because we still have $5,100 of that sitting on the books. So at the end of the year. So now, after all of those gyrations through the cash flow statement, it shows that I have $22,780 in cash flow. And if I come back over here, you'll see that $22,780 was the actual change in cash. So what I've done is I've actually walked through all of these events that occurred and have returned to the number necessary for the change in cash itself. So these two numbers tie out together, and we're good to go, and that is the solution to that particular problem. Thank you for your attention, and I'll see you the next time around.